Let's take a look at some information and charts on Dash for Brave New Coin. So Dash is an older hybrid proof-of-work, proof-of-stake coin with masternodes, mixing capabilities, privacy type capabilities. Although similar to Decred with Dash, it's easy to see those mixing transactions. So it's not exactly private from that sense. And I don't think darknet markets necessarily use Dash for anything. That's always a good indicator for the ironclad strength of the privacy, is whether or not darknet markets are using the crypto or not for its intended or partially intended use case. Got some nice blue tones here that invoke trust, similar to the Coinbase colors. But if we look at the hash rate for Dash over the past couple days, it's dropped 50%. It's dropped like 80% from the highs in mid-2020. Now, this would be a major issue for security if this was solely proof of work. So similar to Decred, Decred's hash rate has dropped significantly over the past couple days. All this stuff is probably China related in some way, or cloud mining related through China in some way, and will probably eventually recover back to the drop. But in the near term, hash rate isn't going to recover. It's going to take some time for miners to shuffle hardware around the globe where they have the ability to do so. But again, not that big of a deal for Dash because it is hybrid proof of work, proof of stake with masternodes. This is the X11 consensus algorithm that they use for proof of work at 4 cents per kilowatt hour. Most of these are not profitable, and there haven't been any new ASICs for this algo since 2019. So there's not generally a lot of love for Dash. I don't see a lot of news about Dash or hype or anybody really talking about Dash. And it's tough to get eyeballs when you're not DeFi these days. Especially if you're an older coin like this. There's kind of not a lot going on unless you're part of the hype cycle of NFTs or yielding DeFi, blah, 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 right? This is the masternodes. There are 4,340, down around 300 from a couple months ago when they were at 4.6K. And it's important to watch this because it represents the amount of collateral locked in the nodes. So that's currently at 45%, thereabouts, 43% of the total circulating. And the more coins that can be locked up, the better in regards to sell pressure. Just absorbs more and more coin that can't do anything else. And to run a masternode, I thought it was 10K, but I guess it's 1,000 Dash. And the reward is 5.75%, but after inflation it comes out to less than 0.5%, which you can get better yield on USDC, basically, on anywhere. Coinbase, BlockFi, Aave, Compound, Maker. The borrowing and lending platforms on DeFi are kind of beating the pants off of these proof-of-stake rewards, which means it's even going to be harder for this stuff to get eyeballs, because Dash, when you're holding the underlying, you're obviously exposed to that volatility. So if you hold stable coins, you don't have to deal with the volatility and get your yield that's pure relative to getting a diluted reward that also has downward price action. So it's probably why you haven't heard too much about these masternode coins over the past couple years, really. Something else that Dash is dealing with that I hinted at with the reward is that inflation is still around 5%, very similar to Decred. Decred's actually a little higher, closer to 6%, greater than ETH, greater than Monero, greater than BTC, greater than LTC, I'm pretty sure, right? Yeah, LTC's 3%, Doge is down there at 3%. So in the grand scheme, it may not sound like a lot, but the longer this stuff goes on, I mean, BTC has been here for over 10 years now. So you're just going to perpetually be competing with stuff that has a lower emissions curve, lower dilution. And as a buy and hold, it's just a tough ask to buy and hold something with a 5x inflation to Monero or BTC and a 2x inflation to LTC even, and more inflation than ETH where like the party's happening, right? And then, so I think that's a big part of why a lot of these older coins haven't really done too much. Here are the mixing transactions per day. 30-day average, declining a little bit from highs. You're going to see these baked into the transaction metrics that I show in a second. This is the private send transactions. down from all-time highs. Basically nothing on any given day. You know, it has privacy capabilities, but it doesn't look like too many people are using that privacy functionality. Here are transaction counts, which if you zoom way out on Dash, you can't really take seriously because they do a ton of stress testing or like max capacity testing. So all this stuff is kind of just unusable, just noise, right? It's not real. So you have to kind of zoom in and then zoom in again. But you can kind of see the rising curve in transactions since 2017, even without the noise of those stress tests. And more recently, it's risen and fallen to an almost equal magnitude. Average transaction values rising as transaction counts are falling, which makes sense. You're seeing fewer, larger transactions. So certainly not bullish to see transactions falling. Just like the cred, again, it looks like NVT is telling you this is the best buy in crypto, right? NVT is at all-time lows. Active addresses, relatively stable, hit all-time highs in May. So this looks good in the vacuum. I don't really trust NVT in general. I think it has a lot of false signals. It's important that NVT is declining, but if we look at XRP, Ripple's NVT is also declining, right? And that's certainly not a buy. So NVT wasn't really tooled for coins like Dash and Decred and Ripple that have a lot of on-chain activity that's not necessarily just transactions. So I would be careful with reading NVT like that, but active addresses still holding highs. Again, this is sort of showing you the mixing stuff, the privacy stuff, showing you a bunch of stuff here that's not just pure staking. That's showing that too. It's not pure transactional activity, organic activity. It's just kind of like ancillary stuff that's baked in here, which isn't like bad for the chain. It just means that this isn't a pure read of truly what's going on. Ideally, active addresses to me represent new people coming online, right? That's the purest signal for the rate of change per day of new people using or new addresses using anything. So you can't really use this as a good signal. MVRV is on-chain activity relative to market cap, and MVRV in the green here. Anytime MVRV's gotten between 2 and 4, so anytime the market cap has gotten 2 to 4 times greater than on-chain activity, it's marked a be careful signal in price. And we just reached 2 in May, and that actually did correspond with the actual top. Not always the case. You can see you have rising price relative to MVRV in 2017, but here it just pinpointed it to the day, basically. So I like MVRV over NVT, over most stuff, because it has a pretty good hit rate for a lot of coins. Here's Dashcoin Google Trends. Spiked up a little bit in February, but since then kind of fell back to its previous range. It did hit multi-month highs along with price, did not hit all-time highs also along with price. Flipping to technicals, 5200 cross, VPVR, yearly pivots, volume, RSI. This is Poloniex, which has really fallen off as a exchange in general, so the volumes aren't going to look spectacular recently. But nevertheless, you're still seeing a ton of volume support, 90 or less, death cross on the 5200. The yearly pivot is also at 90. The yearly open is also at 90. So this probably retraces to 90. Yesterday when I was talking about the cred, I was mentioning the R5 yearly pivot. In general, when you see most things breach the R5 yearly pivot, that's typically signs of extremely overbought conditions. Can it exceed that? Yeah, I mean, ETH did. It takes a special situation for that to happen. But with a lot of this other stuff that kind of has little fundamental value, I would be careful that you're seeing like pure spec activity here and not to get too on board with becoming a community member, buying into this at the R5 yearly pivot. So these pivots will tighten as price tightens in the previous year. So if there's little volatility in the previous year, R5 pivots or the yearly pivots are going to be tight. And if volatility is high in the next year, these pivots are going to expand. So it just gives you an idea of potential support resist areas. And this was basically a 5x from yearly open. So there were plenty of warning signs here that things were going to reverse. And ultimately, it probably just continues to range around 70 to 90. On the cloud, it crossed bearish in May, basically after the drop, so it didn't really help you there. And in general, the daily cloud doesn't really help you too much tells you to get in and out way too much on some of these coins. So it's hard to use as a pure metric. You'd probably have to go to the 2-day or the 3-day to really get an idea of what's going on. I don't really trade Dash, so I don't really know what the best thing to look at for the trend is, other than just like the 50 and the 200 cross, right? It was bullish in November, December, and it went, right? It hasn't been perfect. It crisscrosses frequently, but there was your signal. Dash BTC just continued to lose ground against BTC. Previously, it took 2 years to break out of this ascending triangle, kind of formed this diamond top, and then just has been losing value ever since. Ultimately, probably wants to go back to 01. I just don't know how it gets there, considering there's just no narrative for Dash against BTC. And even against ETH, I mean, no one really looks at this pair, but you can make it mathematically on TradingView. And it's pretty clear that Dash was never an ETH killer to begin with, but ETH has really killed Dash in a sense that it has only really lost value against ETH since both pairs were trading in 2015. So not a lot of bullish things to say about Dash. I don't think that's shocking or anything. Just not much there. Here's also something I'd like to mention. The ETH-BTC fund and the DeFi portfolio I trade for Techemy Capital on Enzyme.finance, non-custodial portfolio management tool. You can send USDC or ETH. You can just watch what I'm doing. AUM, performance, allocations, trades, all done through DEXs, completely transparent. Deposits, withdrawals, and the DeFi portfolio had 15 to 20 DeFi coins in it at one point in time. It is now a shell of its former self because of how swiftly everything sold off. Most of this is sitting in Aave USDC or in some yielding capable vehicle. So that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.